We've discussed startup. This afternoon, we're going to have John Phelan to talk to us about angel investors, and he represents the Halo Business Angel Network. We're going to speak to Tom Early of Enterprise Ireland, who will basically do what it says in the tin thing of what supports Enterprise Ireland give in terms of cash and in terms of advisory services. And Tom himself is a head of funding and scaling solutions. So he actually doesn't give the grants. He has done that formally, but he is there in the same way as you get a corporate financier or Goodbodies or one of those, someone to actually help you and advise you. We're going to speak, as you know, with tech, everyone wants to know who's your team. And we're going to talk about first hires, and we're going to talk to the man who does the Dublin Tech Talks and who really will focus on the change in the tailwind to headwind, from hiring to firing of your Twitters and your Metas and all of those tech giants, and what you need to know about hiring staff. Gavin Fox is from Martinson Mayer and is one of the best in the country and has his finger absolutely on the pulse of what's happening. And our last panel is our most diverse panel. We have Scale Ireland, who represented, you will know the wonderful woman from RTE, Martina Fitzgerald. She was for her Crimes Against Humanity. She was a political correspondent with RTE. She will be speaking what Scale Ireland does. It has 2,200 members, what it does. But we're going to hear more business stories, Cuega, Accionista, and Invoice Fair. And they're going to talk about beyond finance. What are some of the problems and challenges in growing your business? Okay, so basically that's just Ivan padding and filling while the crowd comes back, because I want to now introduce our next panel. But can I say to you that I do a lot of these conferences and been very quiet on the Slido today, which means I have to work twice as hard, which is never a good idea, insofar as that if you have any questions, sli.do, hashtag raisingcapital22, stick in any question you like, and I'll try and make it applicable to whoever I'm speaking to at the time. So I want to move on now to growth capital. And I think we've got an eclectic group of people, and Chris is nearest to me. Chris is CEO of Spark Crowdfunding. You may recall our physiotherapist, Sonia, this morning, and she spoke great about crowdfunding. And I think from an investor's point of view, for relatively small money, it's a fantastic punt to have. And I can actually see, you know, a dual side to that. So we're going to hear all about crowdfunding, how it works, what's the story so far, and how it can help in securing growth capital. Denise Sidhu is a partner in Kernel Capital, and basically I'm going to allow her to tell us all about that. And we all, Ultratech, isn't that right? Yes, Ultratech, they actually walk the walk as well as talk the talk in Kernel Capital. They have seeing, walking, talking investments that are going well. And then we have Lauren Sharp, who is BGF, which I think is the Business Growth Fund.
It is.
Okay. I have been paying attention. And basically, we're going to hear all about that and how its USP operates. And last but not least, he's not Kieran, he's Kevin McSweeney, and he's head of new investments and origination in Broadlake Capital. And I'm going to start with you, Kevin. So basically, with each of you, just, you know, we've had quite a few VC people. We've had venture debt. We've had conventional and unconventional bankers before us, as well as things. So in terms of growth capital, what's the story in terms of Broadlake? What's your story in Ireland? And who are you trying to engage with here?
Yeah, thanks, Ivan. So, just a bit of context. We're obviously equity. We're equity on the later stage of the journey. So, more established businesses. For new investments, typically business out of minimum of about 10 million turnover, would be our space. So, when it comes to growth capital, yes, growth capital is important for us, but to be honest, a decent chunk of what we do is actually equity out for existing shareholders. So essentially businesses that don't need a huge amount of capital. So they're well established, and then it's taking them on the next phase of their growth journey, predominantly through either new markets, but also through acquisitions, because Broadlake is essentially headed by entrepreneurs and not investors.
Are you passive? Would you take a seat on the board? What do you do?
You know, we're active. So, like
You're active. You'll be running the show.
No, right. Absolutely not.
When you appear in the rearview mirror, go on.
Yeah, my hands have not touched the tool in a long time. It's more, we're active. Like the minimum stake we take is a 30% stake. So, like typically, if you look at our portfolio, it's in the 30 to 50% stake. So it's a partnership model. We want the founders or the entrepreneurs or the management to stay in and stay on the journey with us. So, like we're long-term investors. We don't need to recycle funds. It's our own capital. We're not funded by anyone else.
So who do you represent? 10 investors or something like that? Four with deep pockets.
Yeah.
Yeah. Okay. And how long are you in business?
Since 2009. So we set up originally on the back of a sale of a business called Noonan Services, where I actually worked on the M&A side. So. And was very hands-on when you're talking about active, but so have that experience. And I suppose my role now, in particular, over the last few years, particularly as the portfolio has evolved, is strategic acquisitions for our companies, predominantly in the UK and
so what
abroad.
Sectors?
Healthcare predominantly. So 4 of our 7 businesses are in healthcare.
So if all investors are looking the day they say hello to their exit day, what's your exit strategy?
We don't have a line in the sand. Like, I mean, for us, it's more about...
Once in bed, you stay in bed.
No, it's not that either. It's more, to be honest with you, it's not, we don't exit. So like with a fund, you have to exit for the fund to obviously get a return for investors. For ourselves, it's more... when it's right for the business, when the cycle is right, when things are right.
So would you take a dividend then?
We have done, yeah. So like when you and with existing shareholders, because like we have our own investment committee, but that is the committee. There's only 4 of us, and as well with the entrepreneurs. So like we've exited 2 businesses. One in particular, I was only with Michael yesterday. Was a business called Merlin Showering based down in Kilkenny, and we met Michael at an event like this. And essentially he was like, look, this is what I want to do. I want to de-risk myself personally and my family. I want to take some dividends out along the journey through a pension. And then he got an exit back in 2018, got bought by Norcross PLC for about £70 million. So good one for Michael.
Okay. Let's move on to Lauren. So BGF.
BGF, great.
Explain.
So BGF has been in the Irish market now nearly 5 years, and we have a team of 5 investors based between Dublin and Cork. What we're doing is kind of as similar to Kevin. It's all about equity investment, and we are basically looking to back founders. So for us, it's all about founders and management teams, those of profitable and established businesses, so around €1 million in EBITDA plus. And it's for those that are kind of looking at the next, say, 3 to 5 years and saying, there's a huge opportunity. We as a team have a huge ambition to back this, but we need some help along the way. And BGF does that in 2 ways. So first is obviously the capital, which is really important. And we can invest up to 20 million in any of our businesses, a combination of funds on day one or along the journey. And that's for a minority stake. I think really important in our model is it's a true minority. So what that means is we're not involved in the day-to-day. At the same time, we're looking to our businesses to look at what are the 3 or 4 things that can create huge value for you. And that probably is the second part of the BGF puzzle, is all around value creation and expertise. So we've done 500 investments to date in the SME market between Ireland and the UK. So you can imagine with that comes a huge
How many of
amount
those would be in
expertise.
Ireland?
So we've done 13 in Ireland and 2 exits to date. So 2, it's great within the 5-year time horizon to think we've had a really positive outcome for both Team Accessories and Brindley Healthcare. But within, as you can imagine, within the 500, you've got loads of expertise. So in each sector, a group of portfolio with shared experiences. And I think the big thing for us as BGF, because we have the Ireland and the UK model, it's the ability for Irish businesses to have that kind of international reach, and that actually goes into the US as well.
Who funds you?
So we have ISIF is our main funder, and then also AIB and Bank of Ireland. So a big thing for us at the moment, we have a €250 million fund in Ireland, but we're a balance sheet investor. So that means each time...
Sorry, that's an unspent 250? Or
No, sir, we've about 150 unspent.
Okay.
But each time we do an exit, it actually comes back on our balance sheet. So it allows us to reinvest in businesses. So it allows us to invest on day one and then multiple times over the course of our hold.
And typically, what slice of the pie would you go for?
So we can go right up to 49%, but really importantly, always a minority
But your
stake.
preference is half that?
Anything from 10 up to probably 40 would be our starting point.
Okay.
Yeah,
Okay.
it just completely depends on the
And
business and their needs.
Sectorally?
So we cover all sectors. Actually, we're completely sector agnostic. So we can basically look at everything. And even within our 13 investments to date, we have everything from childcare to vitamins business, Revive Active, to kind of earlier stage med tech. So we've got lots of different aspects there.
Okay. Right. Just when you said that, because a lot of people are tech and life science, 5 hours ago, frustrated founder asked the question, there is a strong bias in Ireland towards funding tech to the disadvantage of startup trading, manufacturing businesses, which are often anchored with real potential for revenue growth. Can ISIF lead the way to a new form of venture debt rather than founders having to give a huge slice of equity to PEVC? How would you respond to that question?
Yeah, so I think certainly in the VC space, there is obviously a big focus on tech and life sciences. From BGF's perspective, what we find works really well is we actually have a combination of equity investment, which means you're giving away some of the stake. We also use loan notes, and that's a really good way for businesses to actually take on capital.
And it's a good exit vehicle as well.
Yeah, absolutely. So you're taking on capital, you're getting cash on the balance sheet to allow you to grow, but you're not diluting your stake. So it is a good option. Often in our investments, we have a combination of both.
It can be tax effective for individuals as well. All right, we'll talk about some of the contemporary issues. Denise, Sidhu of Kernel Capital, over 20 years in the Irish market. Okay, what's different about you? Are you less risk averse? Or are you more risk
No, well, we're venture, so there's always the venture and the venture capital.
Okay. You're a proper gambler then. Okay.
So we set up in Cork, based in 2001. We got our first commitment from our LPs 2 days after 9/11. So we're in the market since then. We invest across the island of Ireland. Bank of Ireland and Enterprise Ireland are our cornerstone investors. We have invested in over 80 Island of Ireland companies. We've made over 250 investments in those companies. We are a generalist investor with a deep IP focus. I guess to sum it up, we kind of invest in great founders who are solving real problems in big markets.
And some of your greatest hits are?
One of our greatest hits would have been Stokes Bio. We've heard from Tara this morning. We have great hopes for Ultratech. Imagine the shape of how that pandemic would have been, the last 3 years would have been, if we had that Ultratech device in our homes day one of hearing the lockdowns.
Okay, and we have been exposed to a lot of investors here today. How would you distinguish how Kernel is different? Are you more likeable or what?
Well, I suppose we have two main things. We're based in the regions, so we have offices in Belfast and Cork. Over 50% of our investments are in the regions, and we have a huge female focus. We have a diversity focus within our funds. One of my own passions is
Women in
promoting
business, yeah,
female
yeah.
promoters
And how is
and
that
diverse
going?
teams. Yeah, it's excellent for us. We have started at 9% of female founders in 2009, and we're up to 26% of our portfolio is made up of female or
But you're
C-suite
particularly
level.
looking out for female entrepreneurs?
We are indeed, yes.
Okay.
It's proven, it's well proven. There's many papers that diversity within teams promotes.
Would you be looking
good
for
corporate
spin-outs?
governance.
We've heard about Bridge University funds. Would you be looking for spin-outs?
Yeah, again, about 30% of our portfolio would have very deep college linkages, university linkages, or be directly spun out.
All right. So, Chris, crowdfunding sounds sexy, is it?
Absolutely, of course it is.
Okay.
Yeah. We are a crowdfunding company, an equity crowdfunding company. So we only do equity. There's no debt in there. There's no reward-based crowdfunding as people may have come across before. So we've been active now for 4 years. And in that time, we've had 30 companies, 32 companies actually, go through our stables. One of which you heard from today, Willola and Sonia, who was one of our first companies that raised money with us. And we've gone on to raise a lot more since. So yeah, we raise tickets from anything from 100,000. The biggest one we've done is 3 million. So and anything in between.
And typically your investor would put in how much?
On average, the actual average size is somewhere between 2,500 and 4,000, depending on the actual campaign. But that hides many, many small, very tiny investments, and a few really, really large ones as well. So, you know, the biggest single investment we've had into one of our campaigns is 200,000. So, and we have people quite happy to write checks for 50 grand.
It's quite democratic, isn't
Oh,
it?
totally, and that's what we try and advocate.
If I put in 200 grand, I expect a bigger say than someone putting in a tenner.
And you will have bigger say.
How does that work?
You have more shares in the business.
Right.
That's how you...
So is it through a nominee account, or how do you do it?
Yes, so we wrap everybody up into a nominee account. So there's only one line on the cap table, so it causes no issues going forward if there's a further raise with a VC at some other point in the future, for example, or anybody else for that matter. So yeah, we wrap them all up. They all sit in this nominee company.
But I have some experience of these nominee accounts. And the way it is this. You sign your life away to the nominee. Like, in other words, you've no say, really.
Well,
who actually does the nominee representation?
So we use a very established business who've been operating nominee companies for the last 35 years here in Ireland.
No, but just say you raise and you push 30% of the money in of a startup and so on. Like, who do you have on the board? Who do you have looking after riding shotgun?
There are information rights. So everybody has rights to get the information, and we send those out on a quarterly basis out to all of our investors, whether you put in 100 euros or 100,000 euros. But of course, everybody has a vote through for the AGM through that nominee as well, and there is an ability. We do retain the right to put somebody on the board if we need to. And
okay, so I put 100 grand in. How much do you guys take?
We take a very nominal 7%.
Well, I know everyone says nominal.
Absolutely.
Nominal is in the eye of the beholder.
Absolutely.
How much is nominal for you?
7%.
7%.
So we take 7% of the money that's raised.
Right.
And that's it.
And surely you have ongoing costs then. You've got to run the nominee process in terms of scrutiny. There may be issues for, are we going to vote for the exit? Are we going to vote for this trade sale or whatever? Like, your bills keep running. How do you fund that?
They do, absolutely. But we are very lean. Very lean, so we don't have massive overheads. So we can keep running on our 7%, and we're very happy to do so. And the actual cost of the nominee is paid for by the investee, by the company raising the money. So we don't have that actual cost, although we do retain a lot of touch points as the time goes on and as the company grows.
So when Spark looks at the Irish market, are you more interested in getting people to put a few quid in, or are you looking for ventures to invest in, or both?
We have to do both. It's a two-sided marketplace, and we need investors on one side. We need startup companies or young companies, young growth companies on the other, and we look for both all the time.
Do you charge the growth companies any money?
That's the investee that we charge the 7% on. So the investor pays no fee.
It's all paid by the investee.
Absolutely.
I thought your €100 became €93. No.
No, you still get €100 worth of shares if you put €100 in.
Okay. All right, well, we've done a bit of the landscape there. What would you like to say about all the things, and I'll stick with you, Chris, pressures on valuation, down rounds, more robust DD, co-investment opportunities. What's the market looking like? Right now, you know, a little bit of trepidation for 23. Are we going to have World War III? Are we going to, you know, will we all be dead by Christmas and die roaring between now and then? What's the outlook look like to you?
Rosy, but yes, with caveats, absolutely. The due diligence will have to become a lot more in depth. There is definitely pressure on valuations, and we're seeing that, and we've been seeing that for the last 6 or 9 months even. And because of that, you know, investee companies are having to reassess where that position is for themselves. But we are a marketplace, and if the investors are seeing that that the valuations are too high, they just won't invest. So we have to get a nice balance for both sides for that investment. But yeah, absolutely, there are pressures.
Is it a lot more challenging?
Yeah, very much so. Yeah, absolutely. But having said that, you mentioned earlier on yourself that there's still 146 billion on deposit in this country. So that money has to find a home somewhere. And
well, it's very low interest rates.
Yeah, absolutely. So yeah, and we are finding that investors are very active and wanting to go into young companies and to invest.
One of the things about young companies is they can be quite illiquid.
Absolutely.
Not like your listed company, profit or loss, you can sell the share. How do you address illiquidity? Like, how many exits have you done?
We have done 32 businesses, as I said earlier on. We've had 0 exits so far.
That has me worried straight away.
Well, it shouldn't, because, you know, people have made very aware.
I want to get my money back.
But people are made very aware at the beginning that this is a very illiquid investment, and that money is tied up in that business for 3, 5, maybe even 7 years. But it's
maybe even 10 or 20
maybe
years.
Even 10 or 20 years as well, but absolutely. But the investees themselves, they don't want to do this for the next 20 years themselves. They're wanting to scale that business and get out.
In terms of Spark,
yeah.
Like one of the things where I might put my money in a VC is, you know, what do you expect from a pig but a grunt? The VC will want to get out there. Maybe Spark are too relaxed about getting out of there.
Well, Spark doesn't have a voice in the matter. It really is down to the actual investee as to when they sell. And our investors have drag and tag rights, as they do for most other investments as well. So they'll be dragged along if there's an exit, and they'll be tagged along if so they can't just hold up the party either. So, but again, it comes down to the investees. These investees, they wanting to scale this business and to make a nice chunk of money for themselves as well. So they are wanting to grow and to get out as well.
So it's a common agenda.
Absolutely.
Okay, so what's hot and what's not for you, Denise, in Kernel Capital?
Well, in the history of the Kernel journey and my own journey within that, and with Kernel 20 years, we've seen many turbulent times. You know, we set up just after 9/11. We've seen the global financial crash. We've had pandemics. We've had Brexit. But what we're seeing now that is different to, say, 2009, is that technology has never been so much in demand, you know, across every industry, be it healthcare, be it automotive, be it agriculture, be it fintech. All those industries are currently being transformed by technology.
Because of sustainability?
Because of sustainability, and just because of the advancement of where we are with technology. And
Problem
technology
solving.
will continue to innovate. And entrepreneurs will still go out there, identify those technologies, and apply those to
But surely what we learned this
problems,
morning
because
is
they're visionary.
while we're in Industrial Revolution 4.0, and absolutely this is breathtaking changes in productivity, blah, blah, blah. But there's going to be winners and losers. What are you looking for now? You know, what's the real Denise like when she's in full flight like?
What we're looking for is those companies that are using that technology, and we'll see a return to substance. We'll see a return to companies with good IP that's patent protected, that have tier 1 customers, that have validated roadmap models, that have excellent management teams, and that have that visionary.
That doesn't sound too early stage to me.
No, but there are early stage companies that have got their early stage, you know, their first stage of their product. They've gone out, they've got a tier 1 validation customer, and they are applying that to prove their marketplace. If we take an early stage company we have in our portfolio right now is Kyanda Technologies. They're based here in Blanchardstown. Those guys are in the business automation, a low-code business automation platform. Now, at a time when companies, large companies, are looking to cut their payroll costs and streamline their activities, what a great opportunity for them right now. They've just secured their first 2 validation, large validation, corporate, multinational corporates. Their future is bright. So it's a great time for those guys to currently invest in scaling because their economic metrics are right.
Okay. And what sort of return are you looking for?
We're typically looking, when we invest in any company...
30% per annum,
we're
annualized?
Well, our first 2 funds have returned over 20% per annum to our investors. And that's cash back.
That's after everything's paid for?
That's well, no, that would be growth IRR. They'd be mid to early teens in net after everything is paid for. But that's excellent in VC norms and the top level of our vintages. So we have a track record of being able to invest, grow the company.
And what's the pipeline looking at the moment, insofar as that we heard from the people at Goodbodies that, you've got to have your shit together here. There's no point unless you know your story. You've got a good enabling piece, you have a good multiplier piece, and all that kind of thing. How would you say the standard of people with or without advisors is in terms of their scale, their story?
Ireland is a fantastic innovation hub. We have so much support to startup companies, both formally and informally, within the universities, Enterprise Ireland, ISIF. There's so much potential for our companies. We're an absolute, in the last 20 years, we've seen huge transformation in the ecosystem. There's here today, we have 4 different types, on just this panel, we have 4 different, very diverse types of funders. 20 years ago, that wasn't there. So for the
Whose lunch are you eating?
Whose lunch are we eating?
Yeah. You know the way Anglo was eating AIB's lunch and the way they all had no lunch in the end.
I don't think we're eating a lunch. I think we're developing an ecosystem that wasn't there 20 years ago.
I'm starting to think that maybe conventional banks are having their lunch.
No, because conventional banks would never have invested in a pre-revenue deep IP company. It just wasn't their model. What we are is we're enabling those companies that for future, they will be future banking customers, in fact. Sure. So which is why Bank of Ireland would be one of our cornerstone investors.
Okay, so what most irritates you in BGF when someone's looking for money?
Oh my goodness.
Do you understand me? What are people doing wrong?
No, I think when you're looking for money, I think the biggest thing is to be clear in your own mind around what are your objectives and what you're actually looking for in a funder. Because I think to Denise's point, everyone here brings something completely different to the table. So establishing, I think, as a founder or management team, actually, we have the ambition for the next 5 years and we want to drive that ourselves. And knowing that up front, as opposed to perhaps kind of, if you're actually ready to hand over the keys, then you should be having a different type of conversation. So if you're, I think, of coming to...
So the age profile of the applicant, would that be an issue?
I think the age profile, no, not really, because, depending on...
No, but if a founder is thinking of retiring, that's not what you just said there.
No, exactly.
Yeah.
So if someone
that sounds like someone like younger.
It's not actually an age thing, because you could have a 30-year-old founder who says, actually, I want to exit this business in 18 months, and you can have someone later in life who wants to give it hell for the next 10 years. So actually, age isn't a founder. It's all about the motivation.
It's appetite.
It's all about appetite.
Right. Yeah. What's the common mistakes people make in terms of, well, they just didn't have a great answer to that question? Or?
I think for us, there's not any specific mistakes you make. It's all about kind of a really well-rounded view of the companies. I think for us, it's really about getting to know the founders and the management teams, and for them to be open around, actually, here are the 3 or 4 things that will really move the dial for us, okay? And being open about those, because ultimately, taking on growth investment, it's a partnership. You're in it for the good days and the bad days. So coming in and kind of knowing what those things are, and equally, looking to your investor and saying, well, how can you help us? Because lots of people can give you capital. There's a huge source of capital, as we can see in the room today. But not everyone can, address the issues at hand for your business. So if you want to grow internationally, is that something that your funder can do for you or help you with? And there'll be a different person that's right for you.
Kevin, it strikes me that the bet is very much on the individual. So in terms of and your relationship with that individual, mutual agendas of appetite, and diagnosis of the business and the total addressable market and all the upside and so on. So in terms of the individual, what are you looking for? Are you looking for a family, which could be 2 generations? Are you looking at someone who is a founder? Are you looking for any maturity question? Or are you looking for, something that's a glorified political party and a co-op? What are you looking for or not looking for?
Ambition is one, because like the way we look at things is, to look at your business and kind of go, is what you're looking for a journey or a destination? Because the destination can be predetermined in the sense if you want an exit in 3 to 5 years, whereas where we can take a longer term view to say, listen, that might not happen you might not want that to happen, we might be happy to stay in. So I think it's what is the long-term vision rather than short-term vision. So it's really looking at your business in a kind of a 5 to 10 year horizon rather than a 3 to 5, I think is kind of a dangerous way to look at your business, particularly when you're going through different cycles. So really what we're looking at is, what I love to see is an entrepreneur or a founder looking to take a bit off the table, because sometimes actually what we find is it allows the entrepreneur, it doesn't matter who it is, to to almost behave a bit differently, be a bit braver, have a partner that can help them with a different kind of growth as well, not just reliant on a management team for organic growth.
But that usually ends up in a management buyout, perhaps, of an MBO of some description. Would you be either side of an MBO?
Have we been either? We have been on one side of an MBO, but like a lot of it, to be honest with you, looking back, a lot of it has been founder supported. So now you're talking about age, and I'll just use Michael's example in Merlin. Like Michael didn't set up Merlin Showering till he was 50. So when we invested, he was 64.
I'm 63.
Well, there you go now, Ivan. So if you've got the next Merlin, let me know. But it's look again. The guy just had an ambition for the business. It was a family business. His 2 of his family members were staying with the business. Just a really good story. But he just had a real ambition for that business to be the #1 premium shower enclosures business in Ireland and the UK, and he did that.
What do you think will be different in 2023 for you?
I think lots. I think we're already seeing it. Like a lot of our focus isn't just Ireland. In fact, I'd say only about 30% of our focus is Ireland. We're looking at a lot of with, I suppose, the founders of the business, like Brian Crowley, who set up the healthcare businesses. I deal a lot with Brian on acquisitions in the UK. We completed one there in South Africa, and we're looking at one in the US now. So it's looking at new markets and not just looking at next door in the UK as your only market. It's looking beyond that. So
what do you like South Africa? Because a lot of people I know in South Africa are fleeing South Africa. They really have a negative vibe against some of the things that are happening.
The business is based in South Africa, but it's a lot of its business is actually its clients are in the UK, but it's actually sourcing. Essentially, what it is, it's an international recruitment business for one of our businesses.
Right.
So they've got offices in India, the Philippines, and South Africa. So what they're doing is they're bringing healthcare talent into the UK and Ireland. So
okay, I need to wrap up. The best bit of advice, simplified, that you'd like to give entrepreneurs who might be pitching to you in January 23?
Come to us. Our door's always open. Be prepared. Have your stuff together. Make sure that you've got a good story to tell us, and we're all ears.
Okay. So your door is open, but the question was, what advice would you give them?
To come prepared.
Okay.
Because some of them don't come prepared.
Okay, right, okay.
I'd say to founders, come early, come knock at our door, come early, come talk to us. It's never too early to talk to you.
So we mightn't do it day one, but we'll keep an eye on you and that kind of thing?
Absolutely.
Build a relationship?
We love to build the relationship, love to see them. The most successful companies we have are the ones that come early. They say, oh, look, these are our milestones. We're not ready for finance right now. We want to hit these early stage milestones.
So when they come back to you a year later,
identify them, and they've identified them and they've achieved them.
Right.
And if they've achieved those milestones, you have belief in their ability.
So they might come along as a tire kicker, but you actually can see their potential.
Absolutely. We do open hours around the country where anybody can come spend a half an hour with partner level. We won't be prepared. We'll just
you must
come
listen
and meet
to
you
an awful lot
and
of BS, do you?
It's fantastic. It's so interesting. It's so interesting.
Right.
You know, we meet
More
so many
patience than me,
companies.
yeah.
We meet so many companies, so many wonderful entrepreneurs. It's wonderful. What a job. I'm so lucky to have it.
Lauren, what advice would you give people pitching to you?
Yeah, absolutely. So obviously I mentioned we're dealing more with established businesses, and I think what I would say is, even if you're not considering, raising funding, but you're just thinking, what does the future look like for my business and how can I grow? I think to Denise's point, our door is always open. So for family businesses looking at succession, for kind of businesses considering growing internationally, come have the conversation, see what BGF could bring to the table. And it might be 3, 4, 5 years before that's actually the right solution. But, for lots of our businesses, we met first kind of, couple of years ago. It is a journey, and there's a lot to think about in it. And I think, not specific to BGF, but it's really important to shop around. Your equity investor you take on board, it's a long relationship.
And does that mean no means maybe? In other words, you might say no on an early round, but you're really saying maybe?
Yeah. Very rarely would we say a flat no. Often we would say, actually, maybe this is too early stage for us, but if you can get to kind of A or B, this will be much more suitable for BGF. And I think it's really important for companies to have that feedback and know what are the things I need to do to get to that stage where kind of the growth capital is more suitable for me.
I don't think you're holding open clinics, really, Kevin, are you?
No, no. I suppose. Look, we're
You're not counselling poor SME operators, right? Carry on, yeah.
No, they'd definitely find a better counsellor than me. I suppose what advice would I give? What I would say is think of cash as the commodity. The money is the commodity. It's to think to yourself, what exactly are you looking for and why? Because you can, if you're a good business and you can get the money anywhere, but it's actually like choosing a partner. This isn't a one-sided affair where the investor is choosing you. It's you really got to look at and think, what exactly do you want out of the investor? Are they long-term? Are they short-term? Are they active? Are they passive? How do they invest? So it's kind of, it would be doing your homework on the actual individual investors themselves. So basically what, I suppose what Lauren is saying is shop around, and it's not just shop around, it's just be aware, if you're sitting in front of someone,
There's different strokes for different folks, it's quite clear.
Absolutely, and we'll give you a very quick yes or no. We won't give you a maybe.
Kevin said there, I would just say, speak to the other portfolios.
Yeah.
Speak to the other portfolio companies.
Yeah.
How is the investor performing?
What their experience has been like.
Yeah.
All right. You've been a fantastic panel. For that reason, we've gone 10 minutes over time. My sincere thanks to Kevin, to Chris, to Lauren, and to Denise. Please show your appreciation. All right? We're good.